Hi, it's Matt Samet here with Fortress Financial, and I want to talk to you today about 10 major divergences. And what that means is that the market is going one way, and that's been pretty strong. It's near highs, especially in the U.S. In Canada, it's still off because of the commodity crash we've seen over the last few years. But in the U.S., the biggest markets in the world, they're near peak, which, to be blunt, doesn't make sense. And that's where you look closer at the market and say, are there some divergences between the market and other key signals that tell us that maybe this isn't a healthy market? Here's 10 of them. The first one isn't really a divergence. It is a divergence, but it's demographics. We've talked about it before, but the wealthy have been spending, which has held up a number of things, including the retail sector. Well, if you look at it from a demographic perspective, mid-50s is a time where people with wealth slow down on their spending. They're there now. Demographics show us that. So there's concerns that all of a sudden that's falling off. And if that falls off, that's 70% of the economy. We're in trouble. Retail sales now have started to decline steadily. So we've seen a lot of retailers, actually, for that matter, go bankrupt. So as you see retail go down and the stock market go up, somewhat counterintuitive. It doesn't make sense. Number 3, smart money. We look at this closely. There's a group called Commercials, which is called Smart Money. They've been exiting the markets like crazy. Whereas I hate the term, but they call the rest dumb money. And dumb money has been doing the opposite. They've been buying quite a bit. And that is a clear signal. When money that I would prefer calling it naive money, when they're buying into the market, it's because their psychology is at peak and they feel good and they're thinking is everything's going to be good. Dangerous. Smart money's saying we're at a peak and we're getting out of the game, and they have. The S&P, the U.S. S&P has been going up, but the New York Stock Exchange advanced declines has been going down. And what that means is the number of companies that are advancing versus those that are falling is narrowing. It's shrinking. What that tells us is few companies are holding up the market. Very dangerous. You want to see all the market go up at the same time, or at least the majority of it. Instead here, this is a clear divergence. 2 key sectors that tell us there's a problem are the Dow Transports and Dow Utilities. They've both peaked a while ago, whereas the Dow Industrials are 1 or 2%, or have been 1 or 2% away from the peak. So they peaked, the other ones were already well down. That's called a divergence because those are leading sectors, especially the transports. So again, another divergence. Brexit. Is this going to be the Bear Stearns moment? Simply saying, Bear Stearns happened 6 months prior to the Lehman moment, where with Lehman, the markets crashed. With Bear Stearns, it continued to run up, although it was a huge problem because that was a company who was huge, who sold off ridiculously cheap because they were a mess. So Brexit tells us that there's issues that we got to be concerned about. Number 8, rolling tops around the world. Markets have been peaking at different levels and sectors of the market, like transports and utilities. European markets, Japanese markets, Chinese markets, Canadian market. They've all been peaking. There's few that are left near peaks other than the U.S. market. So we've seen rolling tops. When you get that, that's a sign that the big picture is slowly collapsing. And we're into a 35-year geopolitical cycle. We're in the midst of it right now, and it will go on to about 2022. Not pretty. That simply means that terrorism, wars, people just rallying against the system are going to continue to expand for the next while. It's a divergence to what the stock market's showing. The last one, volume. Volume on the upside has been incredibly weak on stocks, extremely weak. That doesn't say much for people buying into this market and feeling comfortable, especially institutions. It's been rising without a lot of people buying. Not a good sign. There's 10 divergences for you, and I'll tell you, they make me sweat a little bit. They should make you worry and make you absolutely have a plan on how to manage your investments moving forward. Let us help you at Fortress Financial. Take care.